In today's video of our Simplifying the Self-Funded Health Insurance Story series, we're going to talk about an actual example that we give prospective clients on helping them understand self-funding, but again, being simple enough so that anybody can understand it. Our goal here is to help you as brokers get better opportunities by being able to get to that next step in this self-funded world. So let's talk about one thing that we always talk to every prospective client about is the structure of a health insurance plan. Again, I think it's so important to make this simple because the more complex you make it, the less chance that you're going to get the data to underwrite the plan. So here's what we talk about. We'll usually back into the number. We'll say, okay, how many enrolled employees do you have? Okay, great, that's 100 employees. How much do you spend on a monthly basis? 100 grand. Okay, so you spend $1.2 million a year. So let's talk about where that $1.2 million is going at your current carrier. So of 1.2 million, about 10-ish% is going to go to administration costs. What that is to be able to process your claims. That's going to pay the salaries of the employees at the carrier. That's going to pay the technology fees, utilization review, prior authorization, so on and so forth. To again, but very simply, all you really need to say is this is what you need to pay to process claims. Next, we'll talk about stop loss. So I'll say 20 to 25% is going to go to stop loss insurance. So that's going to be a couple $100,000, $300,000 in some cases. So what we'll say here is, I'm going to come back to that, what this means. The last section of your health insurance premium is claims. So that's going to be about 50 to 60% of your bucket. So let's call it 600 grand. The easiest way to explain this claims bucket is to give them a really simple example. I love the example of, hey, every year you get your annual checkup. It's covered at 100% preventative. So of course the doctor doesn't do this for free. They're charging your carrier $100, $200 for that visit. And of course the carrier is not going to pay that out of the goodness of their heart. They're going to charge that to your claims bucket. So out of your 600,000, they're going to charge you $100 from that claims bucket. And they're going to do this with all of your employees. So to explain stop loss, what we do is we say, okay, let's say you claimed $700,000 and you have a $600,000 bucket. Well, you went over. They didn't come back and ask you for $100,000 extra of funding. They're going to give you an increase the next year because you spent more than your allotment. But they didn't ask you in this year for the extra 100 grand. That's where stop loss comes in. They say when you go over your allotment, they're going to kick in and pay the rest of it. And that's how a self-funded plan or a fully insured plan works. But now let's, how do you relate this to a self-funded plan? We're going to do the same thing at Pinnacle Health Plans. A portion of your premium is going to go to administration. The next section is your stop loss premium. And your last is your claims. We're doing the same thing as a fully insured plan. We're just building on an independent model. And then our goal is say, hey, if we can now manage this, we could pay less for claims, which lowers your risk, lowers your stop loss premium, lowers what we need to allot or budget in your claims allotment. And then at the end of the year, if there's anything left over, we can refund it. So brokers, our goal is to simplify this story. Let's not get into aggregate advance, specific advance, mature or immature contracts, captive layers, 1224, 1212, 1215, 1218. Like none of that's going to matter in that initial prospective meeting. Like all that matters is, do they understand where their money's going? Can you get them there to understand that? And then after that, when the numbers come in after underwriting, yes, absolutely. Get into the details. But right now, to get them to understand on a high level what we're doing, you don't want to overcomplicate it because that's just going to throw away opportunities. So in 2.5 minutes, we're able to go through that story. Of course, you might be able to elongate it a little bit more than 2.5 minutes, but just stay simple like that. And if you can get them to get there, then get into the claims details, then get into claims examples, strategies, and whatnot. So I hope this helped. If you are interested in what we're doing at the Pinnacle Health Plans, or you just want us to be a strategist for you, which we are for many brokers, being able to be in these meetings and underwrite for all, please shoot us a message. We love to be able to continue to bring these videos out to help you guys close more self-funded business. Thanks, and I'll talk to you all soon.